Good morning, everyone. It is January 11th, Bitcoin ETF day. Probably not the best day to schedule a call like this. Obviously, we didn't have 100% clarity that the Bitcoin ETFs were going to be launched this morning when we scheduled this, but we will go ahead here anyway. Welcome to the Arca Crypto Market Call, January 2024 edition. I'm Jeff Dorman, the Chief Investment Officer at Arca, joined as always by Nick Hotz, one of the up-and-coming research analysts at Arca and really in the crypto market. For those of you who don't know Nick, definitely get to know him. Has a really great background in both macro, traditional finance, and in crypto. Again, for those, this is, I think, the third or fourth call we've done here. For those who are new to this, I worked at Lehman Brothers in the early 2000s, back when it was actually a prestigious firm before all the fallout. And at the time, the internet was barely functional. Data extraction was difficult. But what Lehman did really well is, especially in the fixed income side, Rick Reeder, the now head of BlackRock, the CIO of BlackRock, at the time was the head of fixed income at Lehman, and did a weekly Tuesday morning call filled with all kinds of charts from Bloomberg, talking about what was happening in the fixed income market. And this was really helpful to new investors in fixed income because, again, a lot of this data was there, but nobody really knew how to extract it. So you fast forward to today, we've been doing this now at Arca for 6 years. We think that in the early days, it was easy to just sort of have a high level view of what was going on. But as the market has matured and as the data has become more available, we think crypto is in a similar place to fixed income 20 years ago, which is there's a ton of data and there's a very small handful of people who really know what's happening. And most people don't know how to extract that data, and most people don't know what to look for, to really understand the nuances of this market. So we hope these monthly calls that we're doing between Nick and I and then the Arca team will help educate investors to find the tools necessary in the space to really do your own research, to understand what's happening, to understand kind of how we as investors think about this industry. No longer just a beginner high-level intro stuff. This is really more in-depth. So before we start here, quick disclaimer. This commentary is provided as general information only and is in no way intended as investment advice, investment research, or research report, or a recommendation. You can read the rest here on the screen. Okay, so Nick, I'm wearing orange today because of the Bitcoin ETF. Obviously not the only thing happening in the market, but certainly probably 99.99% of the focus in the market, at least right now, certainly for today and probably tomorrow. Shout out to the Bloomberg ETF strategists, James Seifert and Eric Balchunas, who have just done an amazing job covering this space. But coining it the Cointucky Derby. Look at this. Look at this chart here, right? 11 issuers issuing a spot ETF this morning, from the behemoths BlackRock and Fidelity down to some crypto native firms, like Bitwise and Valkyrie. I think, and you tell me if I think the ETF itself is obviously monumental, and we're probably going to break all kinds of records. I think $2.1 billion on the first day of trading is the record for an ETF launch, and I think we're already pretty close to that number here as we speak at only 11 a.m. Eastern, with 5 hours left to go in the trading day. But certainly the two things that jumped out to me, Nick, were one, just how much the fee compression has already happened before launch. If you were following any of the SEC filings and each of these issuers have just continued to slash fees and be ultra competitive on the way before launch, which is something that you see over time with ETFs, but usually you don't see this kind of a bidding war, prior to launch. And two is just the amount of seed capital that has been announced for some of these funds. Like BlackRock, the rumor is they had $2 billion of seed capital. We were hearing that Bitwise had 200 million, Van Eck had 72 million. And this is rare, right? Because normally with an ETF launch, you just sort of give 5 or 10 million bucks to the market maker and you say, hey, start making markets. And if people come in to buy and create new shares, then we'll obviously issue more. It's rare to see ETFs seeded with this much capital behind it. I know you've had some experience in your old jobs before crypto with ETFs and some macro flows. Like, what was your takeaway from this, basically marketing war that's happening here on the Bitcoin ETF?
Yeah, I mean, I was going to say both of those things. I was already expecting this to be big. I think we all were, but I did not expect the level of fee competition that's already happened in the seed capital. I've probably seen about three advertisements for ETFs, usually like the QQQ in my life. And in the past couple of weeks, you've seen just dozens and dozens for the Bitcoin ETFs from some of these various issuers, and you probably are going to see more on the way. So I've been kind of blown out of the water by how quick this has come up and how competitive it's gotten.
Yeah, and again, like most of this call is not going to be focused on Bitcoin and the ETF, but given it's happening today, had to look at this. It'll be interesting to track these flows over the first few days. I mean, the entire financial advisory and RIA world is going to have access to a product that they didn't have access to before. Just in terms of market, what I think is going to happen for those who care. I think initial knee-jerk reaction higher, which we've seen over the last couple of days, probably stalls out, next week. And then ultimately, second half of the year is probably just straight up because some of these flows are so big. But what I think is going to be most interesting is probably there will always be a period where Bitcoin trades differently than the rest of the crypto market. When this industry first started, it was Bitcoin and a bunch of Bitcoin spinoffs, right? Your Litecoins, your Bitcoin cashes, your Z cashes, and your dashes, et cetera, right? So it was all sort of the same thing. But for most of you who are listening to this call, now there's very distinct sectors and different themes and narratives within digital assets. Bitcoin being a currency, being much more of a macro play, obviously very different than something like Ethereum or Solana, smart contract protocol, which is also very different than apps that are built on these smart contract protocols that can be sectors like gaming or AI or DePIN or Web3 or DeFi. So inevitably what will ultimately happen is you start building all of this wealth, all this outside money into Bitcoin, and they're going to feel great, feel like they have long crypto exposure. And then what ultimately will probably happen is, you'll have a 2 or 3 month period where Bitcoin is flat while other things are going way higher. And they're going to say, wait a minute, I thought I was long crypto. Why is it not up when everything else is up? And they're going to say, oh, there's this other part of the world as well that we need access to. And that's when you'll start seeing the search for how do I get involved in other assets, right? Whether it's an Ethereum ETF or investing in private funds or some sort of an index product. But I do think this ultimately over the next 3 to 9 months is more interesting than over the next 3 to 9 hours, which will be how the rest of this world starts to think and access digital assets. But just in terms of the ETF itself, going to the next slide here, I think this is a great slide, just looking at how ETFs have affected mutual funds. So the red line on the bottom here is just cumulative flows into equity ETFs, and the blue line is flows into equity mutual funds. So you can see over the last 20 years just how impactful passive management and ETFs have been on the market, right? In the year 2000, only 12% of equity assets were in passive funds compared to about 50 to 55% now. So, passive investing just drives the markets and money is going to be flowing passively into crypto now. And then, again, even if it starts at Bitcoin, it will trickle its way down into other areas of the market. So, I think, this is incredibly monumental. I don't want to gloss over it. I don't want to pretend it's not, but I do want to make sure that we focus on really what's happening in the rest of the market and the data that we're seeing. So, quickly to the next slide here. We'll end it at this, which is that the timing of the Bitcoin ETF is also pretty seasonally important. January tends to be one of the best months of the year. I think it's the second best month of the year behind April historically. I don't know how much weight you put in that, but when you combine the fact that we have the Bitcoin halving coming up in April with the fact that the Fed just pivoted in the fourth quarter of last year, combined with the ETF, combined with seasonality, all eyes are going to be on Bitcoin here. But let's move away from that for a second here. Go to the next slide here. Nick, what does this tell you from a macro standpoint before we get into more of the micro specific, crypto themes and narratives? Bitcoin going up. Does that mean gold's supposed to go up too? Is this a pure macro play, or is there too much idiosyncratic Bitcoin news going on to really compare the two right now?
Yeah, I mean, I think it's a combination for sure. One chart maybe we also could have included was this chart of the flows into the gold ETF or the price of gold after that an ETF got listed, and you can just see how well gold did in the wake of that. Well, now you're in a situation where both gold and Bitcoin are gold is basically at all-time highs. Bitcoin is kind of getting there. And what you've seen is, and we've been harping on this every month recently, but just the massive amount of liquidity that's come into the market recently from the Fed pivot, from some of these other central banks, increasingly from the Chinese government as well. And it's really just created a much more positive environment recently. And You see that in the gold market and you see it in the stock market too. Just going forward here, you know, looking a bit more in macro still, we tend to think about the crypto market in cycles. And, you know, I think about how the cycles performed over different time periods. And this is going back to the beginning of the last cycle, so late 2018. And then I've got in here the different amounts of dominance, so the different relative market caps of various assets. So in blue, we have Bitcoin. So how much was Bitcoin as a percentage of the total crypto market cap? In orange, we've got ETH, and then in aqua, we've got others. And you can see early in the cycle, Bitcoin led really strongly. It was gaining in market cap, even though throughout the overall cycle, Bitcoin lost in market cap. Other stuff picked up relative to Bitcoin. And I've got this line here marked where we would be on a relative basis, the amount of time that's passed in our current cycle since the bottom in the FTX lows in November of 22. And you can see from that time period forward, at least in the last cycle, Bitcoin was kind of down and everything else was up. And you can see that was, especially for ETH in orange there, that was pretty much the bottom in the ETH cycle. And rolling forward, yeah.
To be clear, you're not saying Bitcoin's price is down. You're just saying Bitcoin's relative dominance in the market, meaning Bitcoin underperformed others, but the nominal price of Bitcoin can still go up. It just won't go up as high as others with this part of the cycle.
Exactly. Yeah. And I think, I think there's a reasonable setup for that, and we'll get to that here in just a second. And then here you've got what we had at the beginning of this cycle so far. So again, in blue, you can see Bitcoin really performing strongly. ETH in orange, much weaker, and then aqua, other stuff has actually done pretty well in this cycle. But if you extrapolate that forward here, maybe will we get the same cyclical performance? I think it kind of is validated by past cycles, and just like what you generally see in the stock market, where market leaders tend to outperform early on in the cycle, and then later on you start to get the other things in the market start to really kick off and outperform those things. So I think there's a good setup for other stuff. We've had Bitcoin's kind of time in the sun, and we're in the middle of it right now, but would be curious to see what ends up happening going forward. If you jump to slide 9 here, I mean, we're really seeing this kind of just showing again, harping on ETH here. But Ethereum has really struggled recently. It's been a tough go, and a lot of
the next slide here. Simon, let's go to the next slide here on Ethereum. Thank you.
Yeah. ETH has just lost a lot of the narratives that it's had, that it was really doing strongly with on a relative basis relative to other things. ETH was the first asset to bottom in the bear market, I think in June or July of 2022. And recently it's just kind of lost that shine. And there really has been the lack of narrative, which is something similar to what you saw last cycle as well, where last cycle the story was, hey, we've got Bitcoin, and Bitcoin's going to be this money asset, and we've got DeFi, which is going to be this financial rails that is going to power, it's decentralized finance. But why do you need Ethereum? Why do you need ETH, the asset? Sure, DeFi exists on Ethereum, but what is ETH going to do? And I think you're in a similar place now, where ETH, the asset, has kind of lost some of that between Bitcoin as money and Solana as the rails that power this, and ETH is kind of as the slow, maybe like out of fashion older brother, I guess. But I think there's definitely some things going forward here.
I look at a chart like this, and I know everyone compares Ethereum and Bitcoin, and for good reason, right? Obviously, number 1 and number 2 in terms of market cap, number 1 and number 2, and really in terms of traction in use cases of blockchain. But I think this is the kind of chart that one day will just be completely obsolete. I mean, to me, this is like comparing Apple and gold and looking at it all the time of what's Apple's ratio to gold. I certainly get it, right? Ethereum has always been Bitcoin's little brother. We look at relative value in terms of, even the last charts you were showing about, when Bitcoin does well in the cycle versus when it underperforms. And I think, for good reason, for the next couple of years, we'll still look at a chart like this as well. But I bet in 5, 10, 15 years, it's just not something we'll look at, right? I think it's much more relevant to look at ETH relative to Solana and other layer 1 protocols, ultimately, than it will be to Bitcoin. But I think to your point here, at least for now, the market is still going to focus on this, right? For a lot of reasons. One is because after the Bitcoin ETF, circus is sort of calms down here over the next couple of weeks, the focus will be on when will Ethereum have an ETF, but also, quite a few catalysts coming up on Ethereum itself, right? So I think one of the things, as you said, when a narrative kind of falls, you're looking for what is going to jumpstart that narrative. So do you see specific things, not just the chart here, obviously, but are there specific catalysts, specific narratives that you're looking at to really jumpstart Ethereum into this next part of the year here?
Yeah, definitely is. And if you jump to the next slide here, I think the number one thing on my mind right now is Eigenlayer in terms of ETH Catalyst. So Eigenlayer is a protocol that lets you use staked ETH to go and secure other protocols. So you could imagine it securing an L1 or an L2 or some sort of like on-chain data platform. There's a lot of different things you can do with it, but the TLDR for an investor purpose is it moves you beyond like the 3 to 5% yield that you would get for staked ETH to a much higher. It's kind of like on-chain credit in a way, not exactly, but the same kind of profile where you're taking more risk, but you're also getting more rewards. So you could potentially lose the ETH that you stake if you do this, and something doesn't work out, or not everybody is acting properly on the protocol you're trying to secure, but you do get the more yield in the meantime. And so you've just seen massive inflows into Eigenlayer. There's rumors of an airdrop. And that's kind of, despite the fact that it's not even live yet and people aren't getting paid any yield, you've seen over $1 billion go into that. You're going to see more going forward because it's capped right now. So the only reason it's capped there is because people can't, or the only reason it's stopped there is because people can't put more money in. But I do think that this can be kind of like the Jito airdrop moment for Ethereum, where this thing launches at a $10 billion valuation, puts over $1 billion of capital into the Ethereum ecosystem, and suddenly people are a lot more interested in all things ETH again. Any thoughts there, Jeff?
Well, I mean, as you mentioned, I mean, there's parallels here, right? I mean, we saw what Jito airdrop did for Solana. I mean, you could even go back to, we saw it in Ethereum back in 2020 and 21, right? I mean, the initial run up, if you go back to 2019 being maybe a good parallel for 2023, where you started to come out of the slumbers of 2018. 2019 was a mixed bag, but mostly better. Obviously, COVID threw a wrench in the beginning of 2020, but ultimately, what really took us out in 2020 was these airdrops on Ethereum, right? You had the DeFi, you had Compound, you had synthetics, you had some other Uniswap. I mean, you said both airdrops as well as just sort of new tokens kind of coming on the Ethereum ecosystem. We saw it briefly, like you said, with Solana and the Jito airdrop and the wealth effect it took there. But there's still a lot of levers to pull here for Ethereum. And if we do if you do think of those parallels and you think of 2024 probably being kind of that 2020-21 cycle, you're going to need these, right? You're going to need these to jumpstart ecosystems, to jumpstart excitement.
Yeah, definitely. One thing I'd point out here on slide 11 is, the use of Ethereum actually has been pretty significant, despite all of the focus, mostly being on Solana. As I'm looking at Ethereum gas prices right now, it's probably $30 or more to do an on-chain swap. So that's definitely not near the lowest levels of historical activity by any means. And what you're seeing from that is a lot more users migrating to layer twos. So this here is a chart of all the users that are active on any layer two in the ecosystem. And you can just see, again, it hasn't been focused on as much as something like a Solana, but that's been pretty much up only as well. And yeah, just something where these are in the Ethereum ecosystem. They're allowing you to push beyond that Ethereum level of scale and of cost, but kind of more stealthily gaining traction here.
Yeah, and I think
The
again,
main
going back to the parallel there too is if you really think about what happened in 2021 when you had the rise of Solunavax, right? When you had Solana and Luna and Avalanche, sort of come into prominence. it was again, right, you had a period where there was so much activity happening on Ethereum that basically block space was filled and gas prices were too high and there needed to be a solution. And really the last, you could really classify the last 2 to 3 years as how do we solve for that for the next time it happens, right? That was why you started to get these layer twos, whether that's Arbitrum and Optimism or Base, and also why, these other chains, Solana, Avalanche, et cetera, continue to, the Binance chain, continue to build out as well. I would, my takeaway would simply be the market is just much better prepared for crazy season if it does indeed happen again, right? I mean, you're not going to have that same block space demand glut. In fact, it's probably the opposite, right? You probably have too much block space, and now we need to see if there's actually going to be enough activity to fill it.
So I would agree with you, but I would also push back on the fact that yes, these layer twos have scaled Ethereum for sure. I mean, you're talking $1 or maybe $2 per transaction fees, which is certainly much better than the $30. But to get to those Solana type levels of gas fees, or even any of the chains that you mentioned previous cycles, if you go to slide 12 here, what you really need is these new they're called data availability layers. And essentially it just means that you are going to not only use Ethereum, but you're also, as a layer two, going to use another chain to post all your transaction data on. And I know this chart is a little complex here, but the crux is that for something like an Optimism, for something like an Arbitrum, which are Ethereum layer twos, if you go and post data on a different chain instead of Ethereum, you can achieve something like 50,000, 100,000 transactions per second. Today you can do that, and right now you're talking about maybe 100 transactions. I mean, 50,000 would be, that's the number that Solana always talks about. So that is a huge amount more scale than they can achieve today. And I think that is what gets you to the point where you're talking about, Jeff, that you are just have way too much block space and you don't even have an issue. Filling it is going to be the issue, not having enough. You will have plenty.
Okay, so Ethereum clearly has real catalysts coming up here. There's data to support, what we're seeing, as well as what we're about to see here over the next, 2 to 3 quarters with Ethereum. But let's not forget that unlike 2021, when it was a lot more hype than substance, right? We saw these new alternative layer ones starting to ramp up, but there really wasn't anything happening on them. It's a lot different today, right? I mean, Solana, this is the first time, and I talk to our investors all the time. Obviously, we do different calls for our actual investors in the Arca funds than we do here, but I talk to our investors all the time that at Arca, we tend not to try to predict usage. We tend to try to invest when you actually see it. So for instance, Solana was not a huge investment for Arca in 2020-21. It is something we really believe in 2024 because you're starting to actually see real usage. So go to the next slide here. This to me looks just incredibly different than what we saw in 2021, right? It is no longer just what could be, it is what is. So Ethereum has all these great narratives you just mentioned. That doesn't take away from what's happening on other chains.
Agreed. Yeah, and I've got some of these metrics here. These are just Ethereum versus Solana. So on the left side here, you've got Solana numbers in pink. These are just some basic types of metrics we would look at. I mean, if this were 2021, you would barely see the pink lines. They would be just kind of little blips at the bottom of your screen. And what you're seeing now is real catch up to Ethereum, and you're not quite surpassing it. So these is as a percentage, right? So on the very left, you've got DEX volumes, decentralized exchange volumes on Solana, about 50% of Ethereum, but that's not 2% anymore, and it's been escalating very rapidly. And you see that also in stablecoin volumes, in active addresses, and then over on the right, NFT volumes have picked up. I think actually we had that's what I wrote here. The Solana passed Ethereum NFT buyers for the first time in December. So Solana increasingly becoming the NFT chain too, which definitely was not a thing in 21. So just a lot of the kind of core metrics we look at of kind of blockchain activity as a broad statement we are seeing follow through in those that are coming with the price action, which definitely wasn't the case last cycle. So just real activity going on Solana. And if you jump forward here. Oh,
Well,
go
I
ahead,
think
Jeff.
I think it's important to, we're pretty chain agnostic. I know there's certain people who are, quote unquote Bitcoin maxis or ETH maxis or Solana maxis. I mean, we're pretty chain agnostic, right? We're looking for just blockchain in general and where the growth is. I think when I look at that chart you have up there, though, my first reaction is, well, that's great, but this looks like copy pasta, right? I mean, this is Ethereum already has DeFi, already has stable coins, already has NFTs. Solana's just doing the same thing. So, that's great. And maybe they do it better, right? There's no guarantee that just because Ethereum was first that it's going to be the best. Although there's reasons to believe that that might be true just because of the network effects and the incentives and the way, crypto works relative to the growth of other technologies. But, again, like I think people who are maybe, more I'm on the Solana side or I'm on the Ethereum, people who are less chain agnostic and care about one or the other, they might look at this and just say, well, this is nothing new. This is nothing exciting. It's just the same stuff over and over again on a new chain. Going to the next slide, though, it seems to be there is one area where Solana really is doing something totally new and different than what we're seeing on other chains.
Yeah. So I've got it right there. Solana is the DePIN hub. DePIN is decentralized physical infrastructure network, and what it really boils down to is using crypto in the real world. So building physical infrastructure by using crypto incentives. And these networks generally require a lot of speed, really low cost because they have thousands or tens of thousands or even hundreds of thousands of people already interacting with them. You need to be able to make micropayments. You need to be able to compute information for using the network. So Solana has just been, in a lot of cases, the only chain that's really capable of that. And if there are other chains that are capable of it, they don't have the kind of builder support, the ecosystem capital, the mind share of DePIN builders in the space. And so you can see here, these are all the names of projects listed. I mean, this is on the left, it's just Solana. On the right there's a lot of names too, but that's each of those building their own layer one. And then all rollups have just 2 DePINs total, and then Base has one that we'll get to later that's kind of questionably DePIN. But Solana is really the place to go if you are building on a layer one, not just you're doing your own thing, to do a DePIN project.
Now, is that more marketing and business development, or is that more technology? Meaning, ultimately, if you have all these different layer one protocols, some might gravitate towards different sectors, right? Like, for instance, Flow was trying to be the gaming sports blockchain, independent of the technology. That was the theme that they were going after, right? Avalanche, in some ways, is going after gaming as well. Is Solana purposely going after DePIN from a biz dev standpoint, or is it just that this is the only chain that can actually handle from a speed and cost standpoint the demands of some of these decentralized physical infrastructure networks?
It's both. It's both. They really are going after it and pushing it through. And I think they have a lot of investors in the ecosystem as well that are interested in these types of projects. But also, the technology is just better than everybody else's. When Helium migrated to Solana late last year, they used Solana's compressed NFT technology to basically get all of the Helium addresses and put them onto Solana for like $1,000 or something in total cost, whereas that would have cost millions of dollars on even on a layer two, or something kind of competitive. So it is both.
Okay, so let's keep going with this. I mean, Solana, the DePIN hub, we're going to hear a lot about DePIN probably this year. Again, I mentioned some of the older sectors and themes like DeFi and stable coins and NFTs. Those aren't going away. In fact, they should all be growing quite a bit. But inevitably there's going to be new sectors, new themes. A couple of calls ago, we talked a lot about AI. Let's stay on this DePIN train for a little bit. Like, what's actually happening? Where are the apps? Like, what should people be looking at in terms of both investment opportunities as well as just data supporting the growth of DePIN?
Yeah, and jumping to slide 15 here, we just have seen pretty monumental growth in a lot of these networks in 2023, where it was relatively sleepy, I would say, prior to that timing. Like, if you go back to 22, I mean, maybe 1 or 2 of these projects was live. I mean, Helium was live, has been live for a while, but a lot of these were really just kind of getting started. And last year, what you really saw was large scale growth on the supply side of these networks. So when I talk about the supply side, I'm using the canonical example of Helium here, which is a a wireless network. I'm talking about people who are contributing their wireless signal so that eventually you build out enough of a network where people can use that wireless network on the demand side for their phone plans or whatever. And you've seen that supply side really get kicked off in a lot of different areas. So something like a Wi-Fi map, they're contributing information about where Wi-Fi hotspots are going to be, telling you how to, how to go and access Wi-Fi depending on where you are. Hive Mapper is another one that we think is really cool. Basically drive around, take pictures of the road. We'll talk about that one a little bit later. And you can just see kind of really spanning a bunch of different sectors here across the kind of spectrum of what you can do in adding infrastructure in the real world. Lots of nodes, lots of people being drawn into this space. And just kind of rolling right forward, unless you got a point there, Jeff. On Helium Mobile, I spoke a little bit about how that kind of works, but just even in the last month, we've seen a huge explosion in Helium. So they recently, I think in October or November, rolled out their nationwide 5G plan. And so previously they had kind of just been in the Miami area. And what you really see has been an explosion in the number of users. So this is the minimum number of total subscribers that they have on Helium Mobile. And you can see went from about 5,000 a month ago to over 30,000 today. So just clearly skyrocketing, tons of interest there. And if you go to slide 17, you can see why they have this mobile token. The way that they kind of integrate this is if you subscribe to the Helium Mobile 5G plan, you can opt into sharing your location data with the company. And if you do that, you will get paid mobile tokens for walking around and providing that data. Well, the mobile token went on a pretty crazy run, like, I don't know, 60x run in about 2 months. And so there was a much larger incentive to farm mobile tokens. And so then as a result, a lot of people were excited about getting onto the plan and farming mobile tokens, walking around and providing that data. So that certainly helps. And this crypto economic incentives and reflexivity that you can add to these DePIN projects certainly helps on the way up and can get people excited about them.
Yeah, I think, I mean, again, we talk about this call being, where can you get the data? Hopefully, if you guys are following around the slides, you've seen everything from, DeFi Llama to Grow the Pie to Delphi Digital, Masari, Dune Analytics. This is where the data really matters, right? I mean, you can have a long-term thesis on Helium if you really believe in growth of wireless networks or you think that there is some disruption to be had. But really, to understand why the token trades the way it does with regard to the growth of the actual network, you have to see this data. I mean, the last slide there showing the mobile subscribers, coming via that Dune dashboard, and here just looking at the mobile price and how it affects it. This is really what we're trying to show is there is real data, there's real science behind these token price moves. And to your point, the token itself is a big part of that and the reflexivity that it causes, right? We've just never seen another technology before where early adopters of a technology can be rewarded financially. And it really does bootstrap growth better than anything we've ever seen before. I mean, I use this analogy all the time, but imagine if the first Amazon Prime user was rewarded via Amazon stock for being early, right? Imagine if the first Netflix user was rewarded with stock for being early. That's how you grow technologies. You get people, incentivize people to use it, and you can incentivize them financially to become power users and evangelists. I guess the question with the reflexivity though is like, why don't we see these things stick, right? I mean, we saw Axie Infinity in 2020, 21, where it did, it looked the same way, right? I mean, we went from, a couple 100,000 users to 3 million in a matter of months, and then it went back down to a couple, 100,000 users a year later. Like, how do you keep this going? Like, what does it take for a Helium or for another one of these Solana DePIN applications to keep going? How do you fight off the inevitable, rise and fall when you have this reflexivity involving the token?
Yeah, and obviously we've had this discussion internally a bunch, and I think it's been a bit of a push-pull. on that end. But I think we're seeing real examples of that now. And if you go to the next slide here, I think Hivemapper is a great example of one that has been able to kind of crack that code of successfully adding a little bit of the token incentives and being that DePIN style crypto economic project, but also having a real world, business use cases that it's already seeing traction on. So
Explain this one, because I just learned,
yeah,
you
yeah.
just taught me about Hivemapper a couple of weeks ago, and I think this is, one of the best ideas I've heard yet, of kind of real world crypto applications.
Yeah. So Hivemapper it's a network where it creates a global mapping service or a global map by having its contributors. You buy a dash cam and you put it on your car, and it just takes pictures of the road while you're driving around. And they've had over 30,000 contributors on the mapping side. They have 10% of the world's roads already mapped, despite the fact that they've only issued about 4% of the total tokens. You compare that to something like a Helium, where early on they were just throwing tokens at people for contributing, and you can see that they've been much more conservative, but still had a lot of traction on the supply side. But also they're really seeing some real traction on the demand side. And when I came to this project, when I first learned about it, I was really skeptical because I was like, this is Google Maps. Like, how is this going to compete with one of the best, companies in the world, and Google Maps, which just completely dominates that space? But the key unlock here for me in understanding this was understanding that the freshness, the amount you can get access to the data is the key unlock for a lot of companies. So Hivemapper, whereas Google Maps is probably refreshing the data on the map, in urban areas maybe once every 6 months or something, and in rural areas probably every 5 years. Hivemapper is able to do this already much more quickly than that. So in urban areas, probably like 10 times a day, they can refresh this, and that has some key unlocks already. They've had a lot of traction. They've already got real partnerships with businesses for real dollars coming in. Stuff like autonomous driving, where they need to know what's going on in the world outside of the car that's trying to drive itself. Stuff like property assessment and valuation. So previously people might go look at Google Street View, but it's just not fresh enough. Like, if you want to see this information, more than once per day, there's just not really another option right now. Regulatory compliance in the auto industry as well, they've had some traction on. So there's just been a ton of real use cases here, and I think it's a great example of the DePIN model actually working as a real kind of both on the supply and demand side.
Yeah, and it's interesting. I actually wrote an article 6 years ago. It's probably the first thing I ever wrote about crypto, back in 2018. And it was, basically I've been a Starbucks shareholder for probably 20 years, and I've literally only drank 2 cups of coffee in my life. I mean, I don't use Starbucks at all other than to, use the bathroom or steal their Wi-Fi. But I've been a shareholder, right? So like Starbucks gets nothing from me. I get nothing from Starbucks. It's purely a financial relationship. And think about all the things I do on my daily life that I get no economic benefit from, even though I'm doing it already. And that was what was always so interesting about crypto to me, is like, why can't the things you use be things that you also get financially rewarded? And like, my kid plays travel baseball out here in California. I mean, we're driving every weekend, probably 150, 200 miles. Like, yeah, I use Google Maps constantly and I drive constantly and I get nothing from it. Like, the idea of being able to, hey, let me just put a Hivemapper camera in my dash and let me, help build out a better network and get financially rewarded for doing so. I mean, that's the kind of application that has always excited me about, how you actually use a crypto incentive network and a crypto financial system to bootstrap and grow a real business. Um, so I think it's incredible. Again, we're not here necessarily talking about Arca's investments or about which tokens to buy, but just the applications and what's sort of happening in real time in the market. Um, okay, so you've harped on Solana, you've harped on DePIN. Is there anything else going on in DePIN that's not Solana, or is there, given that this seems to be the narrative du jour, at least right now in the market?
Yeah. So jump into the next slide here. Brain Trust is questionably DePIN, but I think it is a very cool application built on Coinbase's base that I've been excited about recently. So Brain Trust is a talent network. So it's like a job referral and matching network where employees can come on, and if you, as someone who's already on the network, can refer them to come on, and can also refer companies to come on, and then it pays you out in brain trust tokens if there's a hiring match and people make a hiring contract essentially. They've had a lot of traction recently, and I think this one has flown very under the radar. So here, the terms aren't super relevant, but basically this is the amount of dollar value that of contracts that have come from the network, and you're talking about pretty significant numbers. And then Brain Trust itself gets a kind of headhunter fee on the top of that, and uses that to buy back B Trust tokens. So that's how the network or economy works, where it's paid out, B Trust is paid out for referral fees, and then it comes back in once contracts are made and people get employment. And we've just seen a lot of usage of Brain Trust, and you're seeing quite a bit of interest from especially from people using the network. I mean, you have, I think, over 50,000 people on the talent network actively, probably over 500,000 who have actually signed up for it. And I'm just really curious to see where this thing goes. The tech sector has been pretty tough go lately from a hiring standpoint. But as that kind of rolls over and you get a little bit more excitement, and I think you're starting to see that recently in technology space, how well this thing can do, because it has been already very successful despite the kind of macro headwinds it's had.
Yeah, and I think we put out our predictions piece earlier this week, which you can find on our website, ar.ca, and one of the themes was simply like it's put up or shut up time for some of these applications, right? I mean, you think about how technology is built. Is the infrastructure built and then the apps, or are the apps built first and then you need to build the infrastructure to support them? And it's a little bit of a give or take. We actually put a nice chart in our predictions piece talking about that. Maybe we'll show it next month here, but I think we've now seen blockchain go from Bitcoin being the only application as a currency to then all of a sudden smart contract platforms and what can be built on there, to the 2020-21 wave of, oh, what can be built on there? You have DeFi, you have stable coins, you have NFTs, to now, okay, like we got to find a killer app, right? I think stable coins is one of the killer apps, but whether it's something enhanced through AI and crypto, or it's one of these DePIN networks, or something totally else, something entirely else that we haven't even talked about yet. I do think the next 18 to 24 months is going to be defined by, can we find a few more killer apps? Are there use cases like this, whether it's a Hive Mapper or a Helium or a Brain Trust, something that really taps into the power of blockchain and the crypto incentives and builds a real business. To date, we've had apps that, for the most part, get to hundreds of thousands of users, and maybe if it gets to a million or two, it's pretty impactful. Obviously, more traditional companies are in the tens, if not hundreds of millions of customers, and in some case, billions. So got a long way to go, but I do think this year is where we're going to start to see some of these. So, as always, Nick, I thank you for doing this. I think, the whole point of this monthly call that we're doing for everyone listening is there's a lot of exciting things happening in the digital asset market. And it is not enough to just sort of have a high level view of, oh, there's a Bitcoin ETF, or, oh, there's, a crypto index. To really understand this space, you do have to get in the weeds. You have to look at the data. You have to really parse, these different sectors and narratives and try to differentiate between, just what you're hearing on the news with crypto going up versus what's actually happening behind the scenes. So, we do hope this is really helpful. On the next slide here, you can see all the contact information. We do encourage people to reach out to us, check out our website and look at some of the content and education pieces we have on there. Reach out to us on social, send us an email if you're looking to invest. But we want to hear from you. We want to hear what themes and narratives you're looking at, what kind of data you're having trouble extracting, where we can help kind of point people in the right direction. Because again, once this Bitcoin ETF narrative dies down a little bit, the next wave is going to be, okay, what else is out there? What else can we do in digital assets? Where can we invest? What apps can we use? And I think this is, again, if you're under 30 years old, I'm an old man. I got two kids. I got a lot of things going on in my life. But if you have a lot of time in your life, there's just no excuse not to be using these applications and testing them and trying to figure out how can you bootstrap the growth of a network and get rewarded for doing so. We'll keep bringing them to you. Nick, again, great job as always. Appreciate you putting this data and these slides together. Thank you to Sumana and the marketing team at Arca for doing this. Reach out to us if you have any questions. Reach out to us if you have thoughts, and we'll come back to you again next week, or next month, rather.